into a crystal ball is probably soothing, because what hedge fund managers usually see on their computer screens is unnerving, dismaying, troubling, with share prices tending down, down, down. Looking out of the office window can also be calming. It offers a stunning view of New York's Central Park. On the other hand, it's a long way down from the 40th floor. Robert Watson is a founding partner and president of Lister Watson, and he's also its chief investment officer. The strategist has been in the hedge fund business for years. He concedes that the industry is in crisis, but says talk of its demise is rubbish. If that were the case, they might as well abolish the stock exchange, he says.
Burgundy guy. This is a collective wisdom. This is a measure of what everybody knows, and buyers say no, everything's too cheap, and sellers are saying no, everything's too expensive, and it's a weighing machine.
Some fund managers are said to be still making lots of money, like John Paulson, who predicted the subprime mortgage crisis.
Look, he is a very, very smart man, and not only did he recognize it, he figured out and it's quite technical, he figured out a way to exploit that and to manage his way through the process. It wasn't just one idea and one trade. It was a series of decisions that he had to make.
It's an industry that processes information, often very fast. Every fund makes losses. That doesn't have to mean the end of the world, says Watson. At least, not for his firm.
Oh, that's a shame. The manifestation in the hedge fund business was that a lot of people they looked pretty brilliant when they could borrow money at a very cheap price and leverage up their returns. And when that game stopped and the music stopped, they found out they didn't have a chair. They did pretty badly because it wasn't skill, it was leverage. And one of the things that caused this selling panic that I referred to earlier was the withdrawal of that leverage capital.
Robert Watson is the only hedge fund manager we could find who would talk to us. When he told them that, he was surprised. He called some colleagues and urged them not to be so coy with the media. We drove to Greenwich, Connecticut, capital of the hedge fund industry and home to some of its biggest names. It's a rich and quiet town of 60,000, about half an hour's drive from Manhattan. Picture postcard territory, the American dream come true. But in times of crisis, things are changing here too.
A lot of people are definitely kind of cutting back, looking to see where they can cut back. I mean, people are still out buying, but things are on sale more. The stores are not as crowded.
Kurt Rotnovsky runs a dietary supplement store. The trade in vitamins had been really good.
But then at the end of October, boom, right off the cliff. The good customers are still coming in. There are new customers still coming in. So, there are things like that that make you think that business as usual is still continuing to a certain extent. But you can see that how much they're buying each time is somewhat less.
A number of funds are based here at Greenwich Plaza. Some funds have contributed to the global crisis. Some are in big trouble. But nobody here chose to talk to us, despite Watson's exhortations. This taxi driver says the sums the funds play with are mind-boggling, but he doesn't get information from the insiders.
Yeah, we drive a lot of people from there, but we're not talking about business.
Yeah?
Never.
Where have all the gardeners gone? And the owners of the mansions? Funds and banks and brokerages have been slashing staff numbers. Many properties in Greenwich have been put on the market.
Yes, come in.
Let's go in.
Engel and Volkers.
High-end realtors here are doing very well thanks to the crisis.
And in 1 week, Roxana closed $11 million.
In fact, it was $11.5 million.
In contracts,
Sorry,
new contracts.
11.5.
No, we closed 11.5 million, closed, meaning we found properties for these buyers, which were international buyers, in fact, a family from the Ukraine.
November the 11th was Veterans Day. Even old soldiers can't remember such economic turmoil. The mayor of Greenwich sounds slightly sheepish when he points to the failings of oversight by the relevant authorities.
You saw just an explosion of hedge funds in the earlier part of this decade, and sometimes when things take off, you don't think about provisions to regulate.
Back in New York, hedge funds bet billions and borrowed almost as much to do so. Leverage was the name of the game. For many, it ended in disaster. Somebody who was prepared to talk to us runs a firm that advises hedge fund investors, Charles Gradante. A portrait of former US Federal Reserve Chairman Alan Greenspan still hangs on his wall, the patron saint of easy money.
And now we're going through difficult times, and we're going to narrow down the number of hedge funds. The Hennessy Group research indicates that there are about 10,000 hedge funds out there. We probably will get down to 5,000.
The wheat and the chaff are being ruthlessly separated in the hedge fund industry. Some have the skill and the resources to survive, even to make money during the global economic slump.